Hello and welcome to another update video about Natgas. So yeah, yesterday we talked about this resistance here for a possible B wave, yeah, and we reacted to it nicely. Highlighted to you yesterday that my personal preference would be to see a more complex correction, highlighted here in the blue wave count. Yesterday we were here, round about here, just touching the resistance, and the question was, can we push through here straight away? Are we going to rally in a C wave straight away, yeah, in 5 waves here to the upside, or are we going to get rejected? Both possible options. Don't forget, this yellow area was a possible long trade area for anybody who wanted to use it. I mean, I can't tell you to do this stuff. This is entirely up to you because there's more to trading than just looking at the charts. It depends on your portfolio, it depends on leverage, position sizing, and so on. Nevertheless, the yellow area is a larger trend reversal area for this B wave, which the B wave can use to do all sorts of funny stuff here. And from that B wave, we can expect at some point here, as long as we don't break below 222, upside. Now, the question then was in the last video yesterday, okay, we moved up here, possibly in an A wave, come down in this corrective wave B. Was it already finished here, or are we going to see that more complex correction? And again, my preference was to see a more complex correction, or at least to retest this support area again. And I referred to the Fibonacci time extensions. We looked at them yesterday as well. Let's just pull them up. And by the way, this is we do see that more complex correction as it seems, which is great. So the idea, we didn't choose the right tool. So you shouldn't talk and do this stuff. So if we draw the time zones, yeah, then you can see we are exactly here now at the 1.618 extension. Basically, roughly, this correction has now taken roughly 62% of the time of the A wave. That's ideal. Yeah, that's ideal. It can also go higher. For example, the 200% is not unlikely, which means wave A and wave B have the same length. That would be on the 13th of March, that 200% extension. So yeah, yesterday was a tiny bit too short for me, but again, probabilities were close together. So I don't want to say I knew, but likelihood suggested to me that we will come down once more, which I highlighted to you in the last video. So now the question is, what is going to happen now? So obviously we probably didn't bottom here on Tuesday. The chance still exists. I mean, this could still rally now from here. Yeah, we haven't broken the previous low. And okay, you know, that's fine because we are in the trend reversal area again. You know, these are the areas where you can expect these to turn around. So basically trading the range between support and resistance. This is quite a large area, and it would be ideal to see the 50% retracement, to be honest. Yeah, that was, by the way, another reason why I said we possibly haven't bottomed yet, because it only really reached the upper range here, yeah, which isn't ideal for a B wave. Yeah, ideally I'd like to see the 50% level, or the 61.8 would be ideal. So either way, from somewhere in here, we do expect still further upside. Yeah, so this is again an area where you could scale in. As I highlighted to you a few days ago, the yellow area was the trend reversal area where if you want to trade pullbacks, in my opinion, this is an area where reward and risk are quite favorable. But to make that choice, if you want to trade it or not, is of course entirely up to you. I wouldn't try to trade every single wave. I mean, I did take those trend reversal and entry areas off the chart, but we had already 2 or 3 here, yeah, and especially the one down here, for example. I mean, you could still be in that. I don't know how many people took profits or whatever, but you could still be in that and trade the entire 4th wave, ABC, yeah, and that would be significant profit. I mean, trading every single wave sometimes reduces actually your profit. I mean, had you just entered down here when we talked about the entry point after that first 1-2 setup, and let's say we go to roughly $4 for that 4th wave, yeah, I mean, we talk about at least like, what is it? At least 70% profit. I mean, it's not it's not nothing. It's quite a bit. And this is now another one, yeah, where I just wouldn't be so concerned about, you know, do we come down a bit lower? Is it, you know, don't try to pick the lowest point. I mean, I can only tell from my experience, scaling in, you know, having one trade, but splitting the entries, risking, of course, that not all of them will be filled, but it ensures that you have a foot in the door and that at least you manage your risk properly. It's just an idea how I normally handle things. Okay, the question is now, as we haven't bottomed, most likely not, the B wave will most likely then be somewhere here. 243, I would say, or 244 and 235. These are the next key targets. I mean, you need to be aware that we already reacted again to the support area. But it is, in my opinion, at least in the first scenario here that I'm just showing you now, quite likely to make this deeper C wave. Yeah. So in blue, if you look at this blue A wave that came down, bottomed, broke into resistance, and is now coming down in this C wave. So we get a deeper B wave, A, which was basically a flat pattern here, B and C, absolutely a possibility. And in this scenario, I think 235 is not unrealistic. These are the levels that we need to watch, okay? Then we've got another possibility, another scenario where I'm thinking of, okay, yeah, A wave came down, that's fine. But maybe if we start from here, we could just get a larger B wave. As you can see, the B wave only got rejected at the 50% retracement, but we haven't made a new low. So as long as we haven't made a new low here yet, below the 246 level, as long as that's the case, we could still see a larger B wave. And that would, again, be a little bit a more of a complex correction, so that the B wave itself consists of ABC, but we would need to start to the upside now, and we've already seen a bullish engulfing candle. So A, B, C, for example, yeah, and then come down again. That's absolutely possible. So that's what I mean, you know, scaling in. If you scale into these support areas, you would have already now you would have a position, even if it's only a small one, and you could trade the larger B wave into resistance. If it breaks through, fair enough, then you could stay in the position, or you take some partial profits depending on what your plan is for that particular trade. You need to have a plan with every trade. You need to know if you want to trade the B wave or if you attempt to trade the larger C wave. Think about it, have a plan. But these are mainly the two possibilities. Either way, you know, anybody who doesn't want to get so confused and think about, okay, what are the different scenarios? And there are two key scenarios at the moment. Just scale in. Yeah, but be aware that below 222, this setup is probably going to fail. But at the moment, I can't see it. I think the trend has shifted up, and I think this C wave is still to happen. Again, two scenarios just in summary. First scenario, we rallied in an A wave. We're currently coming down in a B wave. It hasn't bottomed yet. We had an A wave here. This is going to be a more complex B wave, and we come down in C, or B wave topped yesterday and we're now coming down in C. But as long as we are not breaking below the Tuesday low, which is here 247, as long as we are not breaking below that, the more complex B wave is absolutely a viable possibility. So this can go on for a bit, and sometimes because of these different scenarios, it might be worth just to try to trade the larger wave, not try to pick every little wave and try to nail every entry, because it rarely works out. Yeah, that's sort of my view. These are the two scenarios. Eventually, what we need to do to confirm a breakout is to get above 274. Yeah, so it's very clear. There are three key parameters here. Yeah, very clearly. It's just a question, how do we get there? And this is what the market can only decide. But as long as we stay above 223, the focus is on a C wave rally into the at least upper third $3 range, maybe for even $5 nearly, okay, as a target. That's one parameter. Next parameter, is that to confirm the breakout to the upside, we need to break above 274. And the expectation is to reverse in the yellow support area. But this is only valid as long as 222 is holding. Okay, that's my update about Natgas. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.